Watch out for the currency. That's really where the action has been. The rupee has fallen over 0.5% to hit an all-time low against the US dollar, trading right now at about 17.33. This is the widest trade deficit gap in 5 years, added to the contagion effect of what happened in Turkey, the crisis in Turkey, that is. Ira is standing by to take us through some of those factors that are influencing the fall in the rupee right now. Ira.
All right, below 70 for the currency, well below it, 70.34 or so, and it doesn't look like there has been any dramatic intervention to try and curb a fall below the 70 level. I just want to make a couple of quick points before we go across to a wider conversation on this. First, it's still worth saying that this is a global story within which a local story is playing out. We have here the chart of the spot rupee and the JP Morgan emerging market currency index. The rupee chart has been inverted just to make the point that the rupee and the rupee's fall is not out of line with what is happening across the emerging market currency space. It's not purely a local story. Having said that, within that global story, if you look at the extent of depreciation in the Indian currency, you can't deny that the Indian currency, barring of course the lira, etc., has taken a slightly steeper hit than some of the Asian peers. You can look at it over various time periods. So if you look at a one-day chart, you know that the rupee today at 0.6% drop is worse off than all of its Asian peers. You look at a 5-day chart when this lira story has played out. Again, the rupee has depreciated 2.3%, the most in Asia. And if you look at a year-to-date period, again, the rupee down 9%, far more than its Asian peers. So the point I'm making is that there's a global story which is of weak EM currencies. Perhaps within that, the local story where the rupee was perceived to be overvalued, where some of the external fundamentals of the Indian currency, such as the trade deficit, have worsened. All of that means that the pace of depreciation in the rupee is perhaps worse than some of the Asian peers, at least. Speaking about some of those fundamentals, we got the trade deficit numbers, and that continues to be a pressure point. The trade deficit and what it means for the broader current account deficit. There are various sort of weights on the trade balance, but the trade balance deterioration, the largest weight on that continues to come from oil imports. Now, all of this, of course, is happening at a time when it's not like portfolio flows have been robust. So, we are hitting perhaps a 2.7% of GDP current account deficit. But against that backdrop, you have negative portfolio flows for the year. 36,000 crore outflows on debt, about 1,000 odd crore on equity, means that we are negative on portfolio flows for the year to date, which means that your balance of payments is perhaps looking weaker than it has for a while. And that essentially sums up where we are in terms of the currency, a global story, within that a local story playing out.